Recently, investment banking firm Jefferies came out with their India Equity Strategy. The report presents a strategic outlook that propels India firmly onto the global economic stage. A stable domestic market characterized by a robust flow of funds and low foreign ownership promises resilience against market volatility. Jefferies suggests that India's journey to becoming the third largest global economy by 2027 has been possible due to factors such as favorable demographics, institutional strength, and effective governance. Hello and namaste, I am Richa Divedi and this is NIJ Explained. Let us decode Jefferies India Equity Strategy in 10 points. Over the past decade, India's GDP has witnessed a remarkable 7% annual growth, propelling it from the 8th to the 5th largest economy globally, with a current GDP of $3.6 trillion. The forecast predicts that by 2028, India will contribute nearly 8% to the world GDP, growing at an impressive 6% over the next 5 years. Supported by a favorable demographic landscape, robust institutions, and sound governance, India is all set to become the world's third largest economy by 2027. India's enduring labour force, coupled with a migration from agriculture to more productive sectors, serves as a catalyst for increased productivity. The report highlights a remarkable 5-year low in unemployment. India's GDP growth exceeding 6% over the past decade is coupled with a reduction in corporate leverage, setting a unique trajectory for sustainable growth. The debt-to-equity ratio in India's corporate sector has decreased from 1.0x in financial year 2015 to less than 0.5x in financial year 2024. Ensuring a solid foundation for continued economic expansion. India maintains low consumer debt levels, particularly in mortgage loans, ensuring a sustainable housing market growth that plays a pivotal role in overall economic development. The country's low household credit to GDP ratio, around 40%, implies that Indians have higher discretionary income, presenting opportunities for increased spending and contributing to long-term economic growth. The government's commitment to fiscal discipline is evident in the lowering fiscal deficit as a percentage of GDP post-COVID. The Consumer Price Index graph demonstrates the successful containment of inflation under the BJP-led government, marking a departure from the inflationary trends during the previous regime. As per the report, India's macroeconomic indicators exhibit resilience, with real GDP consistently improving post-COVID. The current government has been successful in keeping the current account deficit under control. Exceptionally, in the financial year 2019 and the COVID year, the CAD went slightly above 2%. Still, it is an improvement compared to the 3% to 4% range during the last 4 years of the UPA's second term. The Consumer Price Index or CPI graph indicates that the Modi government has been successful in reining in inflation. After reaching high peaks during the period from 2009 to 2014, when the Congress-led government was in power, inflation has decreased under the BJP-led government. This suggests that the current government has been effective in managing the rise in prices of goods and services, contributing to economic stability. India's listed equity market stands among the most diversified in emerging markets. Supported by robust regulatory frameworks such as SEBI and RBI, the market has seen a doubling of companies in each market capitalization bucket over the past 4 years. Despite a current market cap of $4.3 trillion, India is projected to deliver 8% to 10% dollar returns over the next 5 to 7 years. Corporate profitability is surging post-COVID, with the Nifty index witnessing a 21% CAGR in earnings over financial year 2020 to 2024. The report envisions India's market capitalization reaching $10 trillion by 2030. India's vibrant democracy and positive relations with the Western world are key factors highlighted in the report. The report identifies FDI on a steady rise since Prime Minister Modi assumed office. Notably, India's manufacturing base has expanded, with a 10-fold increase in iPhone production and global shipments rising from under 1% to 10% in 2023. The implementation of GST alongside reforms like RERA and bankruptcy laws form the backbone of India's startup ecosystem. Indirect taxpayers have tripled since the introduction of GST with consistent tax collections. India's infrastructure spending tripled between financial year 2020 to 2024, reflecting a significant upgrade despite the social impact of COVID. The report predicts a convincing turnaround in India's investment cycles with steady government investments and a marked recovery in corporate and household investments. India's digital infrastructure, coupled with globally competitive data rates and a rich talent pool, has positioned the nation as the third largest hub for unicorns, trailing only the USA and China. With 111 unicorns valued at over $350 billion, India's growth in this sector outpaces that of China and the US. The country's large smartphone user base and increasing online payments via UPI further underline its innovation prowess. Services export, including remittances, now stands at nearly $450 billion per year. India's IT services and global capability centers contribute significantly to this growth, accounting for 45% of the service export pie. Remittances to India have seen substantial growth, with the Middle East and the US contributing the largest share. India's favorable demographics position it as a continued exporter of talent, ensuring sustained remittance inflow growth. Essentially, the Jefferies India Equity Strategy paints a compelling picture of India's economic trajectory, emphasizing stability, resilience, and growth across various sectors. The report acts as a guiding light for investors and observers, spotlighting India's potential as a global economic powerhouse. So if you found this episode of NIJ Explained insightful, do let us know your thoughts in the comments below. Until next time, this is Richa Dwivedi signing off. Dhanyavad and Namaste.